Good morning, commodity traders. Welcome back to technical analysis for natural gas and UNG and oil, US dollar, gold, and silver. So we'll be looking at their support and resistance levels as well as the most likely scenario price we're heading into later next week. And if you guys learn anything, feel free to like, share, and subscribe. They're always appreciated. And hope you guys are having a great weekend. And let's get started. So we're looking at natural gas on the adjusted chart because you can see we had another rollover of contracts yesterday. So we want to click unadjusted so we get that. We don't get those gaps. And we slightly broke below this falling wedge that we have been looking for a while. You can see this is the daily time frame. So resistance, 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 rejected again there this week. And support, bounce, bounce, slightly bounce Thursday. And you can see it goes all the way back here as well. Bounce, bounce, bounce. So, but it does look like we have slightly broke below it. So the only hope for bulls here is something like this, where we get a bear break, lacking follow through, and then we U-turn back up to retest this upper range of the falling wedge again, which will also coincide. This $2 range is also coinciding with the prior resistance here. So see if bulls can show up, Monday. The gaps on over the weekends for natural gas, it's like a coin flip. Pretty much natural gas is probably the commodity that gaps the most that I know of on Mondays, overnight on Sundays. So you'll see these gaps on futures overnight on Sunday when futures open. And we'll see. Maybe we'll get a little gap up and we're back up. So this will just be a bear break lacking follow through. If we get a big gap down though, then it's a break. It's not like a mini break lacking follow through. So you can see these were lower wicks. We did get one kind of close today below there, and then the next one just went higher. So this would count as a bear break lacking follow through. Another green candle back here, that would count as a bear break lacking follow through as well. Or we do gap down, but we make a lower wick, like this one, where it's just a lower wick, and we ended up closing in here on Monday. That would also count as a bear break lacking follow through. That's pretty much bulls only hope, and bears you just want to take this lower and get a true break below it and close underneath this 1.92. Then that would be a bear break, and we'll see what happens from there. Look at the hourly. Is anything going on here? Nope. So pretty much bear closed at a low for day. So bears are absolute full control. So pretty much they're in control in every time frame. On the weekly, on the monthly, and on the daily is all in a downtrend at this moment. Even the short-term time frame on the hourly is also in a downtrend. Bears will be in control as long as the hourly downtrend is intact. Bulls' very first step is to get an hourly uptrend, something like this. Big enough bounce, pivot being set, makes a new high above the prior high's pivot. That's an hourly uptrend confirmed. So that's the bare minimum bulls need to do to even shift this momentum slightly to their favor. And yeah, that's bare minimum first step. We're not even that oversold on the daily. You can see RSI here, 5 minute, 15 minute, 1 hour, 4 hour. None of it's oversold. So it can still go down, even though it feels like we have dropped a lot, because this is more of a chop, like a grind, sideways grind, versus back here on this drop, it's a straight waterfall. You can see RSI was down at 18 on the daily when we get these kind of drops. But this is more of a grind. So RSI is not beat up yet or anything like that. All right, let's take a look at UNG. For some reason, they just always mess up my lines once they do those adjusted things. But all right, similar idea. UNG did not make a new low, so it's a good sign because it's in a different contract. But so we talked about this on Wednesday, So as long as it doesn't make a new low, and this is a counting as a double bottom, then we'll still have a chance to potentially shape this up a little bit higher. So if natural gas bounces from here, comes up, retest this lower range of this falling wedge, then UNG will have a chance to retest this $15 range over here. Bulls can pull it off. Gaps are a coin flip. So we'll see which way gaps on Sunday. And as of now, let's take a look on the 4-hour charts. Not much, pretty much a complete sideways action. 4-hour charts at this moment. That's the resistance. Same thing with this is pretty much the falling wedge resistance for that gas. This one. Rejection here, rejection here, rejection here. A lot better. It's not making a new low, so that's a good sign. So we'll see if that gas futures can get a bounce, and UNG will also get a bounce. Bare minimum, same thing. I want to see an hourly uptrend confirm. Otherwise, bears are in absolute full control. Weekly, monthly, daily, everything is in a downtrend. So, how will you guys get in if you guys want to get in? Personally, I wouldn't at this moment because there's no signs of bounce yet. I would want to see bare minimum hourly uptrend, and you could just wait until it breaks out of this falling wedge on the bull side, or if it breaks on the bear side and it gets really beat up, like let's say it goes down to like 1.64, 1.65, or maybe 1.76, and then the RSI are starting to get beat up, on the weekly, on the hourly, on the 4-hour, everything's starting to get oversold and stacking together. Then there's a good chance that we may get a bounce. But over here, we're kind of like smack dab right in between, right? We're not too oversold, but we are kind of there, and we're just sitting on support, and the resistance is not even that far away. So even if you get in here, what's your upside? Okay, 8% is not bad, but you're taking a lot of risk, right? This may just flush and head lower to who knows where, especially for natural gas, right? So yeah, you're like smack right between of decisions. There's no conviction really anywhere in both directions. It could go either way, especially down here. But let's say we get really beat up, and then now we have chances of it bouncing on the upside is a lot higher when that happens. Or we get a clear uptrend going with a bull break, then momentum's in your favor, where we can get more upside after that. But right now here it's kind of smack right between. Although you could get in and say, okay, if this, let's say we just open here flat on Monday, and then you're like, okay, if we break Friday's low, I'm out. I'm gonna set my stop loss clear over there, just because if we break Friday's low, that means it's a bear break on this falling wedge. Then you're out. Then your risk is not high, right? If you have a clear stop, that's perfectly fine. But just saying, this area is kind of right smack in between at this moment. Right? You could be like, all right, I'm getting in Monday if it opens flat, and I'm gonna set my target at top of this falling wedge, or just wait to see if you can maybe break out of it. And then we're looking up at 2.2, which is that key resistance level. We're rejected multiple times, 1, 2, 3, 4, 5, 6, 7. That's pretty much the key. So we break out of this falling wedge bull. This 2.22 is the next major resistance I'm looking at. So yeah, that's how I would play it. Right. And if you guys feel free to support the channel at the Patreon link below, and as well, or just click the join button on the YouTube. And there is a free Discord link as well down there. If you guys want to join the chat room, it's all free, and just check it out. Come hang out. And if you guys want to learn more about trading or get better at your habits, all that consistency, and all that kind of stuff, feel free to check out the coaching link for the Patreon link. And if you guys want the intro, book the free 15-minute call and we can talk about it. All right, let's take a look at oil. So oil here is, making that potential equilibrium here. Big move up, big move down, big move up. If we start to head lower, we break the prior low on for Friday, then we're starting to tighten up. Then very tiny range here. As you can see, pretty much the top of the Friday is pretty much the low of this sideways range structure. Essentially, bears are just playing defense underneath this structure here for a rejection there. Top was 80.97 and pretty much the low. You see all these used to act as support, all these lower wicks. Back where it bounced, now it's acting as resistance when it came up to it. Doesn't mean game over for the bulls because the trend is still healthy, but they need to get over above that. This is initial slight rejection there, and let's see if they can pull off. Let's take a look here. So yeah, slight rejection at open here, right at that level, pretty much similar as this one. But let's see if bears need to confirm at least an hourly downtrend here for anything to significant happen, right? This could just curl back up. This is a big enough drop and bounce, and bears are trying to confirm the hourly downtrend here. We're needing to break this low on Friday's low to confirm the hourly downtrend to more follow through from the bear side. Otherwise, it's just some profits and that's it. No real bear volume there. If we can't even confirm an hourly downtrend on Monday. Yeah. But other than that, bulls are sitting okay. No huge red flags at this moment other than rejection from that level. And let's see, bear, you don't want to see price get above Friday's high. Let me potentially head lower. Then if we get an hourly downtrend, the next step is see if we can get a daily downtrend. We have to break Monday's low. Big enough drop. Talked about this. Bounce. And now bears have room to potentially shape that daily downtrend confirm. All right, take a look at US dollar. US dollar actually ended up closing strong on the weekly chart. Let's see, yeah, on Friday, it's probably the PCE data. So yeah, looks like still flagging. Let's see, is it still a bull flag or not? Nope. I mean, you could argue that's a bull flag. We just slightly peaked below it on the 0.382. But yeah, so if we break above Tuesday's high, then that's a bull flag confirmed. And we're likely looking at the top of this weekly resistance if that happens, which is 106 range. And next week, I think we have FOMC. So that would definitely move the dollar quite a bit. So from the Fed meeting, and we'll see about that. But as of now, yeah, it's pretty much flagging. So if it does not break Friday's low, then it's still a bull flag. But I mean, it's quite strong. So that. And the weekly, where's that weekly? Yeah. Weekly trend continues intact. And if we break above this high, we're going to have a monthly uptrend. So that's not good for the it's too strong overall. Yeah, you can see monthly move up, pivot being set now. And if we break above this pivot on the monthly, that's going to be a monthly uptrend. So that'll be quite notable there if that does happen. But all right, we'll see how it happens next week. And the gold. So gold here starting to every day it just kind of like moves higher and then it sells off a little bit, So there may be a little bit of bear here where they want to form a daily downtrend. We'll see. Because we talked about this where there's a big enough drop now where bears have room to confirm the daily downtrend, but they haven't really showed up yet. And we're getting close to 50% retracement. So if bulls start getting over closing above 50%, then the next move is going to be back in their favor, where they just confirm back a daily uptrend. So far, not yet. I mean, they didn't really get over. So still technically, most likely scenario is that we'll make a daily lower high here, given that we have an upper wick there as well. But we need to see some at least breaking low Friday for anything significant. This could just grind up the next day again, right? Just like it did in the last 3 days. Head a little bit higher, close in the middle. Head a little bit higher, close in the middle. It's just the same thing. Head a little bit higher and close in the middle. Just on Monday. So they need to at least break the prior day's low for anything momentum to shift a little bit. But no huge red flags at the moment for gold. This could just be sideways as well. Big go up, we can go like that, form a sideways tiny range. But we just need to see if when the prior day's low break, does bear momentum increase and head lower. So let's see that. All right, take a silver. Silver slightly weaker. I mean, silver is always more volatile than gold, but not much difference. Similar idea with gold. Although count this is a weaker because this is almost this is pretty much one drop. Other than this candle was a little higher, so you can technically count it from here as well. But yeah, similar idea. Almost bounced to 50%. Now, if the bears break prior day's low, will this momentum increase? It's just a chop. Ways. Probably waiting for FOMC as well for any kind of policy decisions for next week, because the dollar is going to move a lot, and the dollar is going to affect the metals a lot as well. So be on watch for that. And if we do break Tuesday low, that's a daily downtrend confirm. Then I'm looking back at 20.5.9, which is top of all these levels, is going to act as support when we do come down to it. All right, that's all, you guys. Feel free to comment below if you guys have any questions, and have a great rest of you guys' weekend.